Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and today we are going to be talking about a couple of different subjects. We're going to talk about interest rates because they did definitely come down. We got a nice little rally, and then we are also going to be talking about reverse mortgage as well. I want to remind everybody that this is an open conversation. If you're here, if you're watching, and you want to be part of the show, you want to ask your questions, this is interactive. Please feel free to do so. Put those into the feed. I can already see that my dad jumped on. He says, hi, my favorite TV people. Dad, thank you so much. I love you. And Nora jumps on. She says, hi, Debbie. Hi, Nora. Thank you so much for joining. So once again, I want to remind everybody that this is an open, interactive show. I want you to ask your questions. I want you to put those into the feed. So today we are going to be talking about interest rates. Why did they come down? Where are they at? Who is this going to help? What do I see moving forward? Do we think that those are going to stay where they're at? So we're going to talk about all of that. And then we are going to jump into reverse mortgage as well, because actually lately I've had quite a few people that have inquired about reverse mortgage. And I do think that it is a very special product. I think that it is one that's got a very bad name tied to it that is not at all what people think that it is. So I do want to spend a little bit of time on reverse when we get a little bit further into the show. Dad says, it's snowing here all day so far. So I am so sorry, Illinois. You guys are getting snow. Here in California, it is a little chilly. It is, sweatshirt, t-shirt and sweatshirt weather. So I definitely do not miss those days. Heather jumps on. She says, hi, everyone. Cindy says, would we be able to refinance at the moment? So Cindy, that is a great question. And you can always refinance. Refinances are not gone whatsoever. It's just a matter of where is your interest rate today and does it make sense to do the refinance based on your personal and direct scenario. So that is something that we can definitely talk about and, give you our opinion. So, if you are embarrassed, you don't want to put your personal situation into the feed for me to read aloud, that's okay. You can always reach out to the office directly and you can get either me or one of my girls on the phone immediately, and we will talk through your personal situation with you and determine if it is something that is a good time for you. So it's a good time for me to throw out that telephone number. I want to remind everybody that our telephone number is the same as the number that you get in your text messages to let you know that we've gone live. So if you do call 844-935-3634, you will get our office directly. So that's 844, we lend for you. WELEND and the number 4. If you call the office, you'll get us. If you text the word mom, you'll opt yourself in to get a text message once a week to let you know that I have gone live, and that allows you to jump in and be part of the conversation. So Cindy says, love you guys. Thank you. Hugs. Thank you, Cindy, so much. Really appreciate that. S Worker jumps on and says, what kind of loan needed to do in addition to the house? Need more cash than equity available? So that's actually a really great question. There are tons of loans that are available where if you do have the equity, you can pull cash out either in a first mortgage or in a home equity line of credit. But in your situation, you're saying that you don't have enough equity to do a standard refinance or an equity line. So in your situation, you would be a very good candidate for a renovation loan. Now, renovation loans come in a couple of different ways. You can do a conventional renovation through Fannie Mae, and you can also do an FHA renovation loan as well. So we would just determine the work that you are going to do. We're going to get your contractor's bids for that work. We're going to provide that bid to the appraiser, who will then appraise your home and then add the work that you plan to do. So the addition, whether it's a bedroom or a bathroom or a larger family room, but they are going to appraise the property based on future value once those improvements have been made. And that is what is going to allow us to then be able to close the refinance, get you the cash that you need, and then you're going to start building and doing the work with your contractor. So great question. I love it. And again, I want you guys to keep throwing those questions into the feed, because that is what this show is all about. So as I mentioned, when we first got started, I want to talk a little bit about interest rates. So why did interest rates come down? How much did they come down? Okay, so we have actually seen about what they call is 60 basis points improvement over where the interest rates were before. And I might sound like I'm talking foreign language to you when I say 60 basis points. But basically what that equates to is about 0.6% is what we've seen in an improvement in the current interest rates. So prior to, they released last Thursday. So I do want to remind everybody, today is Wednesday. This show will actually go live on air in Washington this coming Sunday. So when I say Thursday, we're talking 2 Thursdays ago for those radio people listening by radio. But last Thursday, for all of you that are here with me live right now on YouTube, last Thursday, they actually came out and they gave us our inflation report. And they told us that it's actually looking better than it was. Everybody got very excited. I'm sure you heard on the news, you know, the stock market was up 1,000 points and crypto had a little bit of a rally. And since they've got a little bit of a bloodbath going on. But we had a good report. And I talk about that quite often in my shows as well, where I tell you guys it depends on what they're talking about. You know, somebody comes out and makes an announcement or a report is published, and that can throw all of the markets, mortgage-backed securities, the stock market, the bonds, everything. It can throw everything into a tizzy, either for good or bad. So the announcement that came out was that the inflation numbers were actually starting to come down. They didn't just stay the same. They didn't inch up just a little tiny bit. They actually started to come down. So that actually got the market into a rally. When we get that rally, then we see the interest rates improve. So the nice thing is that we saw a very, very good amount of improvement. Again, what I'd like to say was about 60 basis points. I can't actually put an exact number on it because interest rates do change every single day. But from our very highest to where they dropped to, we saw about 0.60 improvement. So what does that mean? So if you've been hearing that interest rates are about 7.5%, that's what they've kind of been over the last couple of weeks, then now interest rates are going to be in the high sixes. So that's a great amount of improvement. On our government loans, FHAs and VA loans, those actually came down into the low sixes, which is very nice. If you are a buyer and you can get the seller to pay some closing costs for you and maybe pay a couple of points to buy your rate down, you could very well be into the high fives. So interest rates definitely took a nice dip. And it's a good opportunity for somebody that has been thinking about purchasing a home, jumping on that right now, getting into the property, getting that interest rate locked in, because I don't personally think, the Mortgage Mom, my opinion, I don't personally think that we are going to actually see interest rates continue to drop any further. We've actually seen it stabilize. We got one really big rate drop on Thursday last week, and now we've seen it hold pretty steady this week, Monday, Tuesday, Wednesday. I think that we got our nice dip, we have plateaued, and I think that the next place and the next point of contention is going to be upward escalator. So I do think that we're going to see those interest rates go up again. Why is that? Why do I think that we're going to see that? Well, They just came out. So we have this great report come out on Thursday. Everybody's super excited. Interest rates come down. And then they had another report that came out, which I read about on Tuesday. Now, it could have been Monday, but I personally read it on Tuesday. And it was talking about the fact that the Federal Reserve understands that, yes, inflation did get better. It's not fixed. We've still got a long way to go, and they do not plan to let up anytime soon. So reminding everybody, we're rolling into a holiday week here. Next week is Thanksgiving, and our next federal meeting that they're going to meet at the beginning of December. And they're saying, as I'm reading, that they don't plan on letting up. Well, they did tell us the last time that they increased rates this month in November that they were planning to increase them again at the next Fed meeting. So we will see them start to talk about anticipation, what's coming, what's going to happen, when's the next Fed meeting. And I do believe that we'll start to see those interest rates start to climb back up in the upward escalator. So again, for anybody that's been thinking about refinancing, maybe consolidating a first and second into one. So if you have a home equity line of credit, S Worker, and I'm just saying that because that's the name that's showing up on YouTube. But if you've been thinking about doing the improvement to your home and you want to talk about that, renovation product, now is the time, guys. Don't wait. Pick up the phone, call our office. Let's go through your scenario. Let's make sure that we're moving you in the right direction. And definitely, I cannot push this enough. And I've never, ever steered you guys wrong in all of the years that I've done this show. Lock in an interest rate right now. I'm telling you that over the next, I would say, week to week and a half, they are going to start anticipating the next rate hike. So just keep that in mind. That's my 2 cents of the day. So S Worker did jump in. He says, does the money stay in an escrow during the build? So that's actually a great question. So to bring you guys back to a little bit earlier in the show when I got started, she, I'm just kind of guessing right now, I'll say they and them, asked if is there a way to get the cash out to do the home improvements that he wants to do or she wants to do? I'm just going to refer to you as he. I'm sorry. I've just got to pick one. So can he get the money out that he needs without having the equity in the home to do the improvements that he wants to do? So the next question came around was, does the money stay in escrow during the build? And it doesn't actually stay in escrow. It actually remains with the lender. So the bank holds on to the money, and as you start the project, they will disperse funds to the contractor as you go. So the contractor will get a disbursement, will start to build. They will send an inspector out to see the point in the project that builder is at. That builder will request additional, or contractor will request additional funds. They will release another set of funds. The builder will build, your contractor will build, and it will continue to move that way as you roll through your project. So I hope that makes sense and I answered that question for you. Maria jumps on. She says, I have 5 acres lot. So she has a 5-acre lot, and I want to put a modular home there. Can you help me with the loan? So that's actually a great question, Maria. It really depends. So probably not. And I'm going to be honest with you. You can call the office. You can talk to us a little bit more about it. But what it sounds like you need is financing to purchase that mobile home. And we do not do new construction loans. We also, so that would be more of a new construction loan. And if you're buying, just getting a loan for the actual mobile home itself, that's going to be mobile home lending. And so what I would really actually advise that you do, number one, you could call us and talk to us, and we can see if it's something that would work for us and our group. And if it doesn't, I've got a fantastic mobile home lender that I can refer you to. But you may want to actually start with the company that you're going to buy that mobile home from. So many times, there's manufacturers like Fleetwood, and you're looking at the Fleetwood product, and they would actually have a lender that they would refer you to if you are looking to buy one of their units. So that would actually be the very best place to start. But if that doesn't help in any way, if you call my office, we are here to help, and we will help you to solve this. We'll get you the solution. We'll help you solve your problem. So we'll get you a name, we'll get you a number, we'll tell you who to call, we'll tell you how to search it. it, find it, and get the answer that you need. So I do hope that that helps. Again, I want to remind you guys, you're more than welcome to call. What's the best way to call? Well, it's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Give us a call if you want to know when we go live. You want to be part of the show. You want to be able to ask your questions like everybody is doing today. Make sure you text the word MOM to that same phone number, 844-935-3634. That will opt you in. You will get one text message a week. I promise I do not spam you. It is just to let you know that we have gone live, and it gives you a link to go ahead and click on to be able to watch the show through YouTube. So with that, I can see that I've got more questions coming in on the feed. I want you guys to continue to do that. This is an interactive show. It is no holds barred. You can ask any questions that you want to ask. That is what we are here for the 1 hour show that we do. We are going to take a super quick break, and when we get back, I'm going to jump on Fluffy White Bunnies, and then and Maria said thank you. So you're very, very welcome, Maria. I'm happy to help. And so we're going to jump into Fluffy White Bunnies question, and we're going to keep going from there. Again, remember today we're talking about the rates have come down. Get that rate locked in if you've been thinking about doing something. If you don't know if it's the right time, all you've got to do is call our office, and we're going to definitely jump into a little bit of reverse mortgage at the end of the show as well. So stay tuned. We'll be right back.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Here we go. Home buyer education. You guys are looking at the very first screen that is in my PowerPoint presented by Mortgage Mom Radio. You've got my name, you've got my licensing. That's all very important because it is important to know that the person that you are working with is a licensed agent or a licensed loan officer in your area where you're looking. That is very, very important. I do recommend that you have somebody with state licensing for your state. So for example, I personally have 13 state licenses. I'm working on 3 more, so I should have about 16 state licenses by the end of this year. And many loan officers will only have 1 license for the state in which they work and they live. So you do want to make sure that you are working with somebody who is licensed in your state. It is very important. Every state is a little bit different. The rules, everything that goes along with the financing can be slightly different from county to state to city. So that is very important. Now, the cool thing about Mortgage Mom Radio, since we are licensed, or I am licensed in so many states, we can actually work with you not no matter what, but for a good amount of the nation, a good amount of the country, we can work with you. So we have many clients who have called us and said, try to figure out where I want to go. I might want to be in Texas. I might want to be in Florida. We can help him in both of those journeys. Tennessee, Georgia. If you guys want to have a list of every state that we can help you in, please feel free to reach out. I'd be more than happy to give that to you.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and it is Wednesday. I try to go on at 1 o'clock, but there's always something that is happening. Today we went on at 2 instead of 1. So with that, I just want to remind everybody that if you want to know when we go live, the best way to do that is to get a text message. We send it out right when the show starts so that all you've got to do is click on that link and you can actually join in and watch the show and get interactive. It looks like I got a good amount of questions coming in during the break, which I absolutely love. And I want to invite everybody that is watching the show to go ahead and put your questions into the feed. If you are watching the show right now via YouTube or Facebook or even Twitch, please give us a thumbs up, give us a subscribe, give us a follow. We want you guys to be part of the show. We want you to know when we go live, and we would love it if you would share it and you would help our algorithm to keep this show running. So we're going to get right back at it. Give us a call if you have questions. Call the office. Happy to help. It's 844-935-3634, and use that same phone number, text MOM, to get those text messages once a week. So here we go. Fluffy asked right before the break, she says, do you feel, and I'm going to call Fluffy a she, okay? I'm so sorry, you guys. I have to just pick a he or she because it's too hard to try to talk he, she. So here we go. So do you feel getting a home equity loan or refinance is better right now if I need to pull out money? So that is a very good question, one that I have answered quite a few times on the show based on the lending environment. It is something that we get that question daily from people that are calling into the office and needing help. And it really, really depends on the person, what their current interest rate is on their first mortgage right now, if they even have a mortgage right now. It depends on how much cash that they are trying to pull out of their home. So as a quick example to help you guys along, if your mortgage right now balance is $200,000 and your interest rate is 3%, and you call us up and we say, well, we're going to give you an interest rate of 7% if you take out cash, you might think, that just doesn't make sense. I don't want to do that. But if you owe $200,000 and you're looking for $200,000 and the interest rate on a home equity line of credit is 10% plus, then it probably would make sense to put all $400,000 at an interest rate of 7%. Now, the good news is, like I had mentioned a little bit earlier at the beginning of the show, we got a really nice dip in the interest rates. So right now, very good chances are that if you called us and you're looking to do a cash out or a debt consolidation, or to even put your first mortgage and your equity line of credit into one loan, that we would be able to get you locked into an interest rate that is under 7 in the 6% range. We can talk about paying points and buying that rate down and getting that interest rate even lower if it's something that you do want to try to lock in for a very long period of time. Again, all of your options that we're going to give you and your decisions that you're going to make when determining whether, paying points makes sense. Does it make sense to take an equity line? Does it make sense to do a new first mortgage? We give you the math to help you make those decisions. So it really does depend on you. I can't really answer that question. I personally, if you owe $200,000 and you are getting or you want to pull out, $100,000, $150,000, you're probably better off just doing one brand new mortgage where it's a fixed interest rate for the long term. When interest rates come down in the future, you can always refinance it again. But equity lines of credit are adjustable. Their interest rates are significantly higher than what you would be locking in on a first mortgage, and something that because they're adjustable, can continue to go up. As I mentioned at the beginning of the show, that the Federal Reserve is meeting again here coming up in December, and they are going to be increasing that interest rate again, as they had indicated at the last meeting. So, will they change their mind? Could they change their mind? They could, but I'm reading articles of, them coming out and saying, yes, things are looking better. The CPI numbers are better, but we plan to hold course. We plan to stay the course. So I do believe that interest rates are going to go back up. We got a nice little dip. Let's all take advantage of it if we've been thinking about doing that. But definitely, Fluffy, we've got to talk to you. We've got to know how much you're looking to take out. What do you owe today on your first? What is your current interest rate, before I can actually determine what would be the best option for you. So I do hope that helps. I'm going to keep going on through the questions. And if there's anybody out there that has, Fluffy, if you have a question that I didn't answer, or that wasn't exactly where you were going with your question, please feel free to put more comments into the feed. So Nora jumps on. She says, I want to begin the process. I am a first-time home buyer, would like to know where to begin. 4-unit property preferably. So Nora, that is fantastic. We are here to help all first-time home buyers to get the education that they need. That is why I do home buyer workshops. They are on the YouTube channel. I have a playlist that says home buyer workshop on it. So you could jump over to that. You could watch the workshop. It is a 3-hour workshop, so you might have to take me in pieces. You might not be able to sit through it, the whole 3 hours. Maybe you want to binge it because you're getting really excited and you're ready to get started. But everything that you could really need to know about getting started, becoming a home buyer, the process from the beginning to the end. What do the words mean? Okay, I'm pre-approved. How do I find the right real estate agent? Now I'm getting ready to close on the loan. I take you from beginning to end. So that would be number one. That would be the first thing that you could do if you wanted to jump on and you're not quite ready to make the phone call. Now, number two, you seem like you're ready to make the phone call. You seem like you're ready to get that pre-approval started. So the next step, number two, would be to give us a call and let us talk to you. Let us get your application started. Let's get your documentation. Let's see what you qualify for. Give you your numbers. This is your area that you can, purchase. These are the numbers. You're talking a 4-unit building. So we're going to definitely want to make sure that you are working with a real estate agent that understands units, and they can give us a good idea or indication of how much that the additional units would rent for, because we will be able to give you rental income for those units in helping you to qualify for the purchase. And depending on, whether you're doing an FHA loan, there are some additional guidelines that we do need to make sure that you're aware of as you're out looking at properties as a 4-unit. If you're looking for a conventional loan, you would need to have at least 25% down payment for a 4-unit building. So there's a lot to be done and a lot to be discussed. So we want to make sure that we take you step by step. And just like it probably became overwhelming that I just threw all of that at you very, very quickly, we don't want it to be overwhelming. So we are going to take you step by step. Number one step, learn the process. You can do that on YouTube by watching, one of my workshops. Number two is to call our office. Let us help you get pre-approved. And once you're pre-approved, then we're going to talk about properties and a real estate agent. And that's number three. And then we're going to get you out there looking. And so we're going to take you step by step to break it down and to try to make the process easier for you, not overwhelming, and an exciting process rather than a very stressful process. So I do hope that that helps. I hope that I answered that question for you. Thank you so much for asking it. That was wonderful. Heidi jumps on. She says, hi all, I am here too. Heidi, thank you so much for always jumping on. I love when you watch, because when I don't know something, I can have you research it for me very quickly. The next question comes in from My Tuts. I love that screen name. That has got to be one of the better ones that I've seen. And it says, what are the current rates for VA loans? Also, is it a seller's market now or a buyer's market? I am both. So I do love that, My Tuts. I love that, My Tuts. I love it. I love it. Okay, so number one, where are VA loans right now? So VA loans right now are going to be lower than conventional. They've got some of the best interest rates in all of the products that we offer and we carry as far as mortgage is concerned. VA loans right now, they do depend on your credit score and, your loan to value and all the same stuff that any other mortgage would depend on. So I've got to give you a range at the moment, but a VA loan is going to be anywhere from high 5s to mid 6s, depending on you. So definitely, I hope that that helps, but significantly better than where we were previously. So give us a call. We can talk about you, talk about your credit score. What are you trying to buy? Is it a condo? Is it a single family? Are you looking at a refinance, taking cash out? We've got to kind of go through those hoops to actually give you an exact number, but we are definitely talking high 5s and really low 6s unless you've got a pretty low credit score. A low credit score is going to get you into those mid high 6s. So we definitely want to talk about you and what your goals are. So Very good question. Thank you very much, my tuts. All right. So Cheryl Puma jumps on, says reverse mortgage. Yes, Cheryl, I promise I'm going to get to that before this hour is over. So stay tuned. We're going to jump on that here in a minute. Heidi says, boo the Federal Reserve. I know. You got to love them. You got to love them. They're trying to get our economy back on track. I'm not going to say whether I approve or disapprove. It doesn't really matter because it's out of my control. So we're going to roll with the punches, and we're going to keep pushing forward, and we're going to make sure that all of you are homeowners, getting you guys out of debt and making sure that you're strong and you're ready to go, for your future. So Heidi says, Nora, I love working with first-time home buyers. Just give us a call. And my entire team does. I mean, that is, we have really, really built our Mortgage Mom Radio machine around first-time home buyers. That is really how this show began. I really felt that there was a need for somebody that wanted to buy a home to get the education that they needed rather than just be thrown into the process and they're moving in circles like a washing machine. That is not what we want the process to be. We do not want that to be your experience. And so that is really what created Mortgage Mom Radio. And from there, it's obviously blossomed, and we talk, about what's going on in the economy, and we talk about where our interest rates and refinancing and renovation loans and reverse mortgage, and we talk about all kinds of subjects, but it really began for that first-time home buyer. So we love first-time home buyers. They are our absolute favorite, and we want you to be taken care of, educated, and we want you to have a fantastic process. So great comment, Heidi. I love it. Christopher Mejia jumps on, says hello from SoCal. Christopher, thanks so much for jumping in and watching the show. I love that. Thank you for letting me know that you are here and viewing. Nora says, that's great. Thank you. I will watch the video and call you back. Absolutely. Nora, we cannot wait to hear from you. That is what we are here for. And then she says, thank you, Heidi. So you guys, I just want to remind you that this is an interactive show. If you have questions, please throw them into the feed. That is what we are here for. I'm going to read them. I'm going to answer them, and I'm going to make sure that you get everything that you need to know answered today. So with that, we are going to take a break. And when we get back, I am going to jump into reverse. But again, even as I'm talking about reverse, if you have questions about something that is off topic, go ahead and put that into the feed. That is okay. We will move back and forth throughout the show to get all of the questions answered that you are looking for. But I promised reverse. I promised Cheryl reverse. And so we're going to jump into that after we get back from this break. So once again, how do you contact the office? It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. For my radio listeners in Washington, guys, I am not going to be on radio for much longer. So if you do like the show, you like listening on your Sunday, make sure that you do text the word mom to that same phone number so that you can watch us do it on YouTube, Facebook, or Twitch, and you can get interactive and be part of the show with us on Wednesdays. So once again, text the word mom to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. And with that, we're going to take my break and we'll be right back.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so how do you guys contact us? And this is really important because once we're done with this presentation today, you may decide that now's the time. You want to get things started. You want to ask us questions. Let me just tell you that anywhere at all that you look for Mortgage Mom Radio, you can find us. Everything is Mortgage Mom Radio. Don't forget the radio, because there are a ton of people that try to call themselves Mortgage Mom, but Mortgage Mom Radio, you will find us. The website is mortgagemomradio.com. On Instagram, we are Mortgage Mom Radio. You can see it all here. It's on this screen.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 2080233, 572-37926, Illinois 031.0058339, Missouri, North Carolina I-210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
All right. So welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom. And today we started the show off talking about how interest rates did come down a bit. Right now would be a great time to figure out if you should be locking in an interest rate for either a purchase or a refinance. I do believe that this is a short-lived bump in the road, which is actually a fantastic and amazing bump for us since interest rates did come down. They came down by about 0.60, which is a huge number, and it did it overnight. It's held steady for the last 3 days, which is great. Remember, Friday, the markets were closed last Friday, and it was really Thursday that when things kind of went off the rocker. We've actually held strong Monday and Tuesday, Wednesday of this week. I do believe that they are going to stay pretty stable through the holiday next week, and then after that, you're going to start hearing them talk all about the next Fed meeting and increasing interest rates, and we're going to see reports coming out, and we're going to see interest rates start to move. So get something locked in, give us a call the office, talk to us. Let's figure out if now's the time, or if the time is to wait longer, that's okay. But we are here to help you. We give you the math. We let you make the decisions that are best for you. So with that, I do want to jump into a little bit of reverse mortgage because I do think it is a fantastic product, one that doesn't get enough talk. It doesn't get what it deserves, I guess, is the way that I want to say it. And I can't find the word right now, but it really is a fantastic product. It really does work for some people really well. And so the best way that I want to explain it is that a reverse mortgage does exactly what it says, exactly what it's called. It goes in reverse. So instead of making a payment every month and your balance drops and goes down, you don't make a payment, or you make a payment, but it's very small, depending on how you choose to set up your reverse mortgage. But instead of your balance getting smaller, your balance gets bigger. And it is going to continue to increase for as long as you keep that reverse mortgage, and that reverse mortgage stays open for as long as you live. So I've had a lot of questions. People ask me, well, number one, who is a reverse mortgage good for? So I personally think that a reverse mortgage is fantastic for somebody who their real estate, their home is the bulk of their assets at the time of retirement. So maybe they worked a really long period of time for a company, but they don't have a pension. All they've got is Social Security. They have a 401k, but that balance isn't very big. They really just didn't ever really get the chance to do a lot of investing or saving, but they have this house. It's worth a good amount of money. They don't owe very much on it, if anything at all. And they really, to go and to sell the house, they could do that. They could take the lump sum, but where are they going to go? They want to stay where they are. They want to live in the home that they've always lived in. Their property taxes are low because they've been there for a long time. So when the real estate is really your retirement vehicle, it's really your biggest asset, that is where reverse mortgage would come in very well for somebody. Now, if you have the opportunity, this is one of the things that I get quite often from families that get upset when they find out that their parent or parents have looked into doing a reverse mortgage. They get upset because they feel like the home that they thought that they were going to inherit, at the time of their passing is going to just be lost. And it's not. So the number one thing that I want to make sure that everybody understands is that title does not change. When you get a reverse mortgage, your title does not change. You are still the owner of the property. So what does that mean for sons and daughters or other relatives that would stand to inherit your home? So when you do pass, the note on the loan, or the note on the home will have to be paid off. They will give your family 6 months from the time of your passing to pay off that loan. They can refinance the property or they can sell the property. So they do have an option to keep that home in the family. It does not go to the bank automatically. It is not something that is taken away from them. They get to inherit the property exactly as they would in any other situation. If you pass and you have a mortgage against the property, it's going to be the same thing. They're going to have to take over the mortgage, or they're going to have to, they're going to have to refinance it or sell the property. It's really no different. But with a reverse mortgage, they would have to either refinance or sell. Now, if the home is upside down, so as I mentioned before I jumped into that piece, was the reverse mortgage is going to stay on that home for as long as you live. So let's say that at the age of 62, you took a reverse mortgage. They cannot at any point in time say, sorry, your house isn't worth your value anymore. You owe more on it than what it's worth. We're going to cut you off. You have to pay us back. Can't use this reverse mortgage anymore. That doesn't happen. If they put you in the reverse mortgage, you are guaranteed for the life, for your lifetime, your lifespan, that you're set. The terms that you set up, that you agree to, that stays. That doesn't change. So let's just say, for example, property values drop, or you live substantially longer than what the bank would have anticipated. And now you owe more on this house than what it's worth. Your heirs are not required to pay it back. So if the house is worth less than what you owe, they can choose to just let the bank take it back. If the home is worth more than what you owe, they can refinance or they can sell the property. So a couple of just things I think that do get misunderstood that I wanted to make sure that I do put out there for everybody to understand about reverse mortgage. Again, I think that it is a fantastic tool for somebody whose retirement vehicle is their house, or maybe somebody that really wants to stay in their home, not move, not go somewhere else. They don't want to downsize. They don't want to sell the property and go to a condo. For whatever their reasoning might be, that is who a reverse mortgage is good for if you're not making enough money to make ends meet to qualify for normal financing. Now, somebody that's got a fantastic monthly pension and a fantastic, they've got pension, they've got Social Security, they're doing some stuff on the side with some self-employed income, they've got more than enough budget to spend on making a mortgage payment. Obviously, for, your kids and your heirs and those that are, that you're trying to make sure that you're leaving something to, it leaves them with a property that has less debt on it, more inheritance coming their way. So if you can afford those mortgage payments, fantastic. But a reverse mortgage is for somebody that doesn't want to change their lifestyle. They don't want to change where they live, or maybe selling the property and going and living somewhere else actually makes things worse. They're better off to stay in the home that they're in. That is what a reverse mortgage is good for. So some of the things that you do want to be aware of is who can get a reverse mortgage. What do we need to see from you? These are all very important things to know when determining if a reverse mortgage is something that would be good for you. So one misconception that a lot of people have about reverse mortgage, again, I think that a lot of misconceptions came before the Dodd-Frank Act and before the Mortgage Financial Reform Act. There were things that were done that were differently back in those days. And since that time, everything has been rewritten, and it has been to protect the consumer. So it is much, much different today than what it used to be in the past. So you do have to have, we are going to check. I don't want to say you do have to have. We are going to check your debt to income ratio. We do need to make sure that you have the means to afford to stay in the home, to cover your property taxes and your homeowner's insurance, to cover the other expenses that you have on a monthly basis. So debt to income ratio does come into play. Now, it is significantly different than a normal mortgage. We're qualifying you significantly different. It is not at all the same qualifications, but we are going to check that you do have the funds to be able to take care of yourself, that you've got at least enough income coming in somewhere else to cover those things that are important. Your credit score. We are going to check your credit. Way back in the day, a reverse mortgage, it didn't matter what the credit looked like. Today it does. You can have a low credit score, but you're not going to be able to get as much in financing. We're not going to go to as high of a loan to value as we will for somebody that has a better credit score, better credit rating, doesn't have any tax liens, doesn't have any other, negative things on the credit report, hasn't missed any recent mortgage payments that they are going to feel that they need to bring the loan to value that would be allowed in financing to a lower level. So we are going to check credit. We are going to check that you do at least have the means to cover your personal expenses, your property taxes, your insurance. So that is very important for you to understand, because in creating the protections for the consumer, it did also bring in additional guidelines for the lender that they need to follow when qualifying you for that reverse mortgage product. Okay, so some of the things, these are hot buttons that I get. Who can get a reverse mortgage? So number one, a reverse mortgage is for somebody of retirement age. Now, it starts at the age of 62. So you do have to be at least 62 years of age to get a reverse mortgage. Excuse me. The lower the number for your age, so the younger that you are, the lower that the loan to value is that they are going to allow on the loan. So if you are 62 years old, I've got my cheat sheet right here for you guys to make sure I'm reading this accurately. But if you are 62 years old, the maximum loan to value that would be allowed is going to be 0.424. So let's just call it 42%. So what exactly am I talking about? I know that I'm probably starting to kind of talk in tongues right now. If your home is worth $100,000, that means that your maximum loan amount that can be offered is $42,000. That is the maximum loan that your loan can start at. So think about it this way. If you own your house free and clear, as an example, and your house is worth $100,000, with a reverse mortgage, you could take at 62 years old, you could take a $42,000 loan, cash in hand, obviously minus closing costs and all that good stuff, but just to keep it simple, $42,000 is what your new mortgage loan could be. Then every month, as you do not make a mortgage payment, your balance is going to increase. So they are leaving the difference, the 58%, in 50, 60, 70, 80, 90, yeah. 58%. I'm in the studio, so forgive me, but 58%, they are going to leave equity in the property because you have so many years expected life expectancy. So your life expectancy has so many years left that they are going to assume that with every monthly payment, every month that you don't make, your mortgage balance is going to go up over all of those years. So let's say that you are 80 years old and you are calling us and you owe nothing on your house and it is worth $100,000. You would be able to take 0.546. So let's call it 54%. So your 42,000 could now be 54,000, and now you're not making a payment every month for your complete life expectancy. So, we can go all the way up to, if you were 90 years old, we could go up as high as 0.66% or 66% of your home's value. So if you have a mortgage, let's say today, and you owe $50,000 on your $100,000 property, you would not be a candidate if you're 62 years old for a reverse mortgage. But if you are 75 years old, we would be able to pay off the mortgage you have, set you up with the new reverse mortgage, and now you're not going to make payments moving forward. So if you have a particular scenario, or if you've got a friend, or you've got a family member or you have a parent that's been thinking about doing a reverse mortgage, I can tell you it is very, very easy for us to get you a quote. It is very easy for us to give you the numbers of what they would qualify for. And we can do that very simply, and then you can take that back to them. Or if it's you yourself personally that is interested in this option, you can call our office and we will take you through it. It doesn't take very much. There's not a lot that we need to know in order to get you the information that you need to get you that quote so that you can see what that might look like. So number one, how do you call the office? It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Call our office, and I'm going to take a very quick break. And when we get back, I'm going to give you the list of information that we need to know in order to get you a quote for that reverse mortgage. But make sure that you do call the office and you talk with us. Stay tuned. Don't go anywhere. And if you guys are in Washington listening by radio, you need to text the same phone number. Text the word MOM, MOM. And that way you can jump on Wednesdays and watch me do the show live. So one more time, the phone number is 844-935-3634. Call the office, text the word MOM. We're going to take a quick break. And when we get back, I'm going to tell you what I need to know about you, a loved one, a family member, your parents, whoever it is that's calling that wants to get this quote. I'm going to give you that list of questions that I'm going to ask you so that when you call my office, you're prepared. So stay tuned. Don't go anywhere. Hi, this is Debbie Marcoux, host of the Mortgage Mom Radio Show. Hey, do you know what an FHA loan is? Well, tune in, listen up. It is a do-over loan, in my opinion. They've got great circumstances for anybody that's got lower credit scores, possibly a short sale or a foreclosure in the past, even a bankruptcy. Give us a call. It's 3.5% down to buy a home, and refinancing is there to help you as well. It's 844-935-3634. Or head on over to my website at mortgagemomradio.com. All right, so welcome back to Mortgage Mom Radio. That was a super quick commercial. Just wanted to take a quick sip of some water and then get back at it. So what do we need from you? What do we need to know in order to give you an estimate for a reverse mortgage? So number one, obviously, we're going to get your name and we're going to get your birth dates. So if it is just one, if it's just mom or just dad, or if it's mom and dad, we need to have birth dates for both borrowers or, anybody that is going to be on this loan. If they live together in the home, they both have to be on the loan. They both have to be a minimum of 62 years old or older. So I do want to mention that. But number one, we need names. We need birth dates. We need the property address. We need your best guess at what your property value is, just so that we've got a place to start. We need to know how much that you owe on the current mortgage. So we need the mortgage balance. We will want to know how much that your property taxes are per year, how much your homeowner's insurance is per year. And that is pretty much it. It is that simple for us to get a quote. Now, if I missed something that is really important, we will obviously ask you when you call, but it is pretty simple. We need to know how old you are. We need to know how much you owe on the house. We need to know what the house is worth. We need to know how much your property taxes are, and we need to know how much your homeowner's insurance is. Now, if there is an amount of cash that you would like to have in hand, then obviously know that as well. Be prepared to tell us what you're looking for in cash in hand. That would be something that we want to make sure that we factor in when we get that quote for you. So reverse mortgages are fantastic, guys. I can get way more detailed on it if you'd like. You can get your consultation with me or one of the girls on the team. They'd be happy to take you through it, get you the estimate, and see if it's something that would work out well for you and for your family. This is what we're here for. We're just trying to bring you guys different options, different information, and different subjects and loan types every single week. I do see that Welfare jumps in and says, welfare gang in here. And I love that. Thank you so much for jumping in and watching the show. Sure do appreciate it. We are just about at the end. If anybody has any additional questions, please feel free to jump into the feed now and ask those. I would be more than happy to read them out loud and answer them. But I want to remind everybody that you guys give us a call, text the word mom. It's always the same phone number. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. That's how you call the office. That's how you send us a text message. And if you text mom to that number, you will get opted in. Now, please don't text mom and anything else. If you do more than just MOM, you will not opt yourself in to get the weekly text message. It doesn't recognize it. It's just a computer system that's doing it. It's intelligent but doesn't have common sense. It's a computer. So just make sure that you literally only text mom, and that will get you opted in so that you do not miss any of the shows that we do, and you can jump on live and you can get interactive with us here at Mortgage Mom Radio. Lori Weir jumps on. She says, hi, did interest rates go down? We see about reverse mortgage later. We'll call about that. Lori, yes, go back to the beginning of this show and listen. That is actually what I started this show all about. We saw a really great interest rate drop. My personal opinion, the mortgage mom, not a financial advisor, just somebody that's been in the industry for approaching 30 years. I hate to say that so out loud. Oh my God. Wow, I feel old. Anyway, just the Mortgage Mom Radio's opinion of what I do think that we're going to see, but I do believe that the lower interest rates are very short-lived. So again, if you've been thinking about doing any kind of lending, taking out cash, debt consolidation, consolidating a first and an equity line of credit into one loan, purchasing a home, you guys need to reach out. You need to do it right now. And if you can get an interest rate locked in, you need to do that. You need to be talking to us about lock and shop programs, anything that we can do to get you locked in. This is the time. We had a big rate drop that nobody anticipated, and I do not anticipate it sticking around for much longer. With that, I do want to say I always forget every single week to wish everyone a very, very, very happy holiday. I will not be on next week because Wednesday is the day before Thanksgiving, and it is the day that I roll up my sleeves and I start cooking. And when I say cooking, I cook from scratch. I roll up my sleeves and I start Wednesday morning, and we eat Thursday at 3. I will not be on. We will be dark. There will be no show next Wednesday, but I will be back the Wednesday after. So I do want to take this opportunity to wish everybody a very, very happy holiday, happy Thanksgiving, and you guys will see me after the bird is done on the next one. Talk to y'all real soon. Goodbye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.